The worst thing to happen to both Twitter and Tesla is Elon Musk himself. Tesla shares fell to an 11-month low on Tuesday as a pessimistic analyst note was added to a flurry of worries about the electric vehicle company and its high-profile CEO, Elon Musk. Let's find out more about the $575 billion losses and what this means for the company as investor patience wears thin. First up, down like the economy. Taking control of Twitter may have been good for Elon Musk, but it hasn't been great for Tesla's stock. Tesla shares fell 12.2% the day after Twitter revealed it had accepted Musk's $44 billion buyout bid, wiping out more than $125 billion from the electric vehicle maker market share. Wall Street is concerned about the deal's influence on the electric vehicle producer and its stock price since the stock has taken a massive drop. How is Musk financing the takeover, you ask? Apparently, he would cover $21 billion of the transaction's financing personally, with banks assisting with the other half when he secures the rest of the funding. There's also growing concern that owning Twitter could put him in conflict with the Chinese government over free speech, which is an important market for Tesla. There's also a good chance that Musk will be sidetracked by his recent acquisition, men and their inability to multitask. Tesla shares fell another 6% on Tuesday, wiping $30 billion off the market and bringing its share price losses to 44.6%. When we say it's a massive drop, trust us, it's a massive one. The company's market valuation has dropped to $660 billion from a high of more than $1.2 trillion. The latest drop came after an analyst cut his price objective for Tesla equities from 1,150 to 800, citing the impact of COVID-19 lockdowns in Shanghai and supply chain concerns, where the electric vehicle maker operates its so-called Gigafactory. Supply issues affecting its Austin and Berlin plants have also been given as reasons for the steep drop. According to Nathan, the headwinds will reduce delivery by 180,000 vehicles this year, resulting in Tesla delivering 1.2 million vehicles rather than the 1.4 million predicted previously. The statement comes just one day after Wedbush analyst Dan Ives warned that this week's Twitter shareholder meeting would flare off some more fireworks between Musk and the company's board of directors. Investors are concerned that the proposed takeover will draw his attention away from Tesla, adding to the huge overhang. The consequences on its so-called Gigafactories in Shanghai, Austin, and Berlin, according to Jairam Nathan of Daiwa Capital Markets in New York, would cut deeper into earnings than originally forecast. Nathan, on the other hand, defended Daiwa's decent stock raise owing to the accelerating electric vehicle penetration in Europe and China. We think that this isn't the only reason why Tesla stock fell, though. Their environmental, social, and governance track record has weighed on investor sentiment as well, as indicated by S&P Dow Jones Indices' removal of the business from its S&P 500 ESG index. Next, we have the Twitter takeover. In a tweet that shook the company's share price and cast doubt on whether the deal will go through, Elon Musk said that his $44 billion takeover of Twitter is temporarily on hold. On Friday morning, Tesla CEO Elon Musk tweeted that the acquisition was on hold while he sought details to back up Twitter's claim that fewer than 5% of its users were spam or fraudulent accounts. Musk then tweeted that he was still committed to the acquisition despite reports that the world's richest man was likely to back out or seek a lesser price. Musk later stated that he would study the matter with a random sample of 100 Twitter followers. Analysts and onlookers were perplexed by the news, prompting some to speculate that the eccentric billionaire was attempting to back out of the contract or renegotiate it. Musk and Twitter have agreed to a $1 billion break fee if Musk walks away from the deal, but it also includes a particular performance clause that a judge can use to compel Musk to finish the deal at the agreed-upon price of $54.20 per share. Musk announced that freeze on the Twitter acquisition with a link to Reuters report from May 2nd that referenced a filing with the U.S. Securities and Exchange Commission in which Twitter stated that fraudulent or spam accounts accounted for less than 5% of its 229 million daily average users. However, the report doesn't appear to offer any new information on spam accounts, as early quarterly filings dating back to 2014 similarly mentioned the less than 5% figure, though with the warning that the true amount could be greater. What we don't understand is how these bot accounts could be a deal breaker for Elon Musk, but we'll probably find out soon. And now there's chaos all around. The decision comes just one day after Twitter announced the resignation of two top executives as part of an internal reorganization. The Musk takeover plot has sparked outrage among Twitter users and employees. Meanwhile, as Tesla's stock price has fallen, the CEO has been hunting for new investors to back the purchase. Musk's Tesla stake is a significant part of his deal financing, and suspicions that he'll sell or pledge more of them are putting pressure on the stock. It's pretty clear that people aren't happy with Musk's moves. But has anyone been able to reason with this guy? Time for some other related news. Starting with horrible bosses. While the world moves toward remote flexible work, a certain micromanager is having a field day. Everyone at Tesla found an email waiting for them this week, stating that they're required to spend a minimum of 40 hours in the office every week. This is what Elon Musk wrote in an internal email, adding that if you don't show up, we will assume you have resigned. Worker activists slammed the move, citing the risk of exposure to the coronavirus and the plain insensitivity of his words. The co-founder of Atlassian Pick, an Australian project management software company, mocked the policy in a series of tweets, calling it something out of the 1950s. Musk, who routinely uses Twitter to make unapologetic statements about difficult topics, is no stranger to such exchanges. During the epidemic, several tech firms in Silicon Valley switched to a hybrid work routine, while others established dates for returning to the office only to push them back, but we guess that doesn't cut it for Mr. Boomer Boss. And now Musk has more to say. Surprise, surprise. Bill Gates, a billionaire philanthropist, was lambasted by Musk after a report stated that Microsoft co-founder spent millions fighting Musk's $44 billion Twitter takeover. Hundreds of millions of dollars allegedly flow from Gates Foundation to 11 of the 26 organizations that signed an open letter last month pushing Twitter advertisers to leave the company if Elon Musk restores free expression on the network. A study analyzed public filings to connect hundreds of millions of dollars in contributions from the letter signatories back to the Bill and Melinda Gates Foundation, citing research and analysis by the Foundation for Freedom Online. The article aligned that 11 of the 26 anti-Musk organizations received funds from a Gates-backed corporation. Musk had a very tasteful response to that. What a dick move. According to FFO's analysis, the Gates Foundation paid $457 million in cash grants to or through New Venture Fund. Following Musk's tweet, news appeared late Wednesday indicating the anti-Musk campaign is funded by affluent Democratic donors and their family foundations, labor unions, and European governments. About 26 activist groups and non-governmental organizations sent a letter to Twitter advertisers earlier this month, urging them to abandon the network if Musk implements content filtering measures. This comes as no surprise because this guy has a history of going up against other billionaires in public and on social media. Somebody take Twitter away from this man. Next, we have Tesla layoffs. According to an internal email reviewed by Reuters, Elon Musk has apparently said that he has a very bad feeling about the economy, which is why he needs to slash workers by approximately 10%. On Thursday, Tesla executives received an email with the subject line, "Stop all hiring worldwide." Tesla didn't respond to a request for comment right away. Tesla employees were given the option of returning to work or leaving the company earlier this week, according to Musk. And finally, Elon Musk sued. Elon Musk and Twitter are being sued by a Twitter investor over the billionaire's $44 billion purchase of the firm. He's accused of breaking California corporation regulations in a variety of ways, according to the lawsuit. It accuses Musk of wrongful behavior, claiming that his false statements and market manipulation have generated chaos in Twitter's San Francisco headquarters. Investor William Herzniak filed the proposed class action complaint this week in the U.S. District Court for the Northern District of California, claiming to be acting on behalf of himself and all others similarly situated. In case you didn't know, a class action lawsuit is one that has been filed or is being defended on behalf of a group of people. Safe to say, people are not happy about this Musk-Twitter saga. That's a wrap for this video. What do you think about Elon Musk acquiring Twitter? Will Tesla face the brunt of this move? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.